Good morning, everyone. You all are warmly welcome to today's webinar. As you all know, today the subject is BE Business Environment. We have selected the lesson Supportive Services to the Businesses. For this session, we have invited Mr. Chamara Premathilaka. He is an associate member of Chartered Institute of Marketing UK. And also, Mr. Chamara possesses a postgraduate diploma in business management in University of Colombo. And he has completed his MBA in University of Colombo. So without taking your time, let me hand over the session to Mr. Chamara. Over to you, sir.
All right, so good morning, everyone. And as we promised last week, last session, we are going to have another session today for business environment. And today we are going to talk about supportive services to the business. And now there we can All right, so as we promised in the last session, so we are going to conduct another session for supportive services to business. And there we are going to talk about basically how supportive services help business to operate their activities or functions their operations in a business. Now, so let's take a look at the chapter introduction. Now, basically, when we define what business is, business always identify customers' needs and wants and develop product and services in order to satisfy those requirements and needs by expecting a profit in return. So in that process, basically, once they produce a product or service, from that point, in order for them to transfer that product or service to the customer, there are various services involved in between these two ends, right? So there is the producer is one side, or maybe the seller is one side, and on the other side, the customer is on another side. So in between, there are various services that we have to get in order to effectively transfer these product and services to the customer. So today, we are going to talk about all the services that we need to have in order to make this process a success. So as you can see in the slide, there are many essential services to running a business. Business support services can be defined as all the services that help the end user to deliver the product in the right quantity, at the right price, at the right place, right? So if we want to achieve all these three criteria, the right quantity and the right price and the right place, so we need to get the support from all these supportive services, right? So now if you take a look at what these supportive services are, so basically banking, insurance, communication, and transportations are very important when we talk about this transferring process. And another thing, every business is keen to maintain these services more efficiently. And efficiently and effectively. And it seems that businesses are focusing more on transportation and logistics. So if you take a look at why companies are focusing and giving higher weightage on these aspects, is because how a customer experiences a product or service will depend on how that customer takes the support of the supportive services, right? Even though the product is quality enough and the product is in a level which satisfies customer requirement, but if these supportive services are not up to the standard or up to the level of the customer's requirement, so then customer will not be able to satisfy or get a full service from the company. And as we said, so this unit aims to provide an understanding of business support services as well as transportation and logistics services. So that is the chapter introduction. And today we are not going to talk about the entire chapter. We are going to talk about the half of the lesson. And once you finish the chapter, or once you finish today's sessions, these learning outcomes will be able to achieve, get. Identify the role of supportive services. Now, as I told you, we need to understand what kind of role these supportive services play in terms of business activities. So these supportive services: money, transportation, communication, insurance, and logistics, right? So the one thing you need to understand and identify the role these supportive services play in an organization, in a business organization. And then we need to understand the importance of managing supportive services. Why we need to manage these supportive services, right? Why we need to take a close look at these services. And also, finally, explain characteristic of each supportive service. Now, if we look at money as a supportive services, and if you take transportation as a supportive services, what are the characteristics, right? So what kind of transportation methods are available, right? And what type of communication we have to do when we are doing these business activities, right? So we basically focus on three things. One is the role supportive services play in an organization, and importance, why we need to manage them, importance of managing them, and the characteristic of those supportive services, right? So let's start from money as a supportive service. So now if you define money, what money is, anything that is generally accepted in the exchange of goods and services can be defined as money, right? So now here, one important word we can see here is the exchange of goods, right? As I told you previously, so why we need these supportive services is because we are exchanging of goods, right? So we can't just do it alone. We need to get the support from other sources as well, right? So, so in the process of exchanging goods and services, one most important thing, one major important service is money, right? So money is, as I explained, anything generally accepted in the exchange of goods and services can be defined as money. The main requirement here is that it should be accepted by the public as a medium of exchange. Now, when we are going to exchange good or service, one major thing that we look at is the acceptance, right? So if we have a medium that we exchange goods or service, which is not accepted by others, so it's a big problem, right? So money, the most important thing is it is accepted by the public, right? So let's go into detail about these medium of exchange. And so if you look at how these medium of exchange evolve over the time, and we need to start from this barter system. So barter system, what we did was, like you may have heard about this term before, commodity exchange era. So at that time, there is no medium in between the exchange process. So what we do is we transfer one good or service to another, right? Let's say, for example, you transfer coconut for rice. So why we do this? Because some people have more rice and some people have more coconuts. And then, so they're not sufficient in every aspect. So then they try to transfer them, exchange them. So they are that we call that era we call commodity exchange. We exchange a commodity, right? So that's called barter system. So that's where this medium of exchange was started, right? So then later on, the era of using materials as a medium of exchange, so that commodity money. So we use some materials to exchange product and services. And then we came to metal money, so a metallic money to use the exchange of goods and services. Then we came to the era where we now have the era of coins and notes, currency. And again, now these are like the updated stages, use of bank money, like current accounts, and near currency, that those are like currencies which have higher liquidity rates. You can quickly convert them into cash, so saving accounts and certificate of deposits. So those are called near currency. And then electronic money, so and credit card, debit card, electronic wallet, and DigiCash. So these are the electronic money examples. And then finally, network money, cyber money. So this money we use for online transaction. So this is how this medium of exchange evolved over the time, right? So now if you look at the first stage, first era, we didn't have any thing in between to exchange. We exchange good or service to another good or service. But later on, we use some mediums to make this exchange process success, right? So that is the evolution of medium of exchange. And then, so since money plays a major role and since we are using it in a large scale, so we are going to talk about some characteristics of good money. So how we can identify good money, right? So one aspect of good money is general acceptability, right? So if you want to do a transaction and if you want to exchange something over money, it should be accepted by everyone, right? So that is called general acceptance, right? This is one of the main attribute of characteristic of good money. And also dividing into smaller units, that's called divisibility. So now when it comes to making payments, we must be able to like even make a small payment, right? Or maybe higher payment. So if you can do that, that means that money can be divided into smaller units, right? And also durability. It should last for a long time. You can use it for a long time, durability, and easy to carry. So now usually if I look at these exchange process and medium of exchange, barter system. So now sometimes we face many difficulties to carry these goods when we are transferring them and exchanging over goods, right? But money, what the advantage is not like that. We can easily carry, so that's called portability, right? So then it should be homogeneous and easily identifiable, and uniformity. Homogeneous means should be equal, like similar. And also the other thing, inability to print easily. So difficult to counterfeit, and this should be difficult to copy and produce same amount of maybe notes or coins, right? So that is called inability to copy or inability to print easily. And it should be not common or scarce as well, right? So if it's like so common, and then sometimes we can like do some other activities with that. But if it's not that scarce as well, and also not subject to frequent cancellation. So when we experience and face these kind of frequent cancellations, what happens is we can't maintain the trust on those money or that money. Why? Because we have doubts whether this will be canceled again, right? So we need to maintain that recognition continuously, and stability of value, right? So value should be stable, and if we consider one value at one time, and that should be similar even another time as well. That's called stability of value. So those are the characteristic of good money. Now, if I summarize them: general acceptability and dividing into smaller units, durability, portability, and should be homogeneous and difficult to counterfeit, and not common or scarce, and not subject to frequent cancellation, and stability of value. So these are the characteristics of good money. And then we're going to talk about functions of money. What are the activities that we can do using money, and actually what can we do with money? So it's, as we told previously, we can use it as a medium of exchange, right? And it is meant to act as an intermediary in the exchange of goods and services, right? So when we are exchanging goods, it's an intermediary. So money, now let's say I buy a vehicle, and for that value, we give money. So it's an intermediary in exchange of goods and services. In other words, any product or service can be exchanged for cash and money for any goods and services. These are major important functions of a currency. Okay, so then standard of value, the idea is to use money to value a product. Now, everything nowadays we can value in terms of money, monetary value. We can give it for a monetary value. Now, as we took an example, like if it's a vehicle, so we can say it's based on the number of, if it's a used one, based on the number of years it has been used, we can give a monetary value for that particular product or vehicle. So that is the standard of value. And in today's world, any item or thing is not appreciated or valued by money. This measure is the price. This has made accounting easier. So this quality is therefore used to act as a unit of account. Okay, standard of value. And acting as a deferred payment medium. Deferred payment means the current contract can be used for a future payment. Now you want to give some money in future, you can do it, right? So that's called deferred payment. And this transaction is done by the medium called money. Therefore, it is also called a medium of future payments. You can make future payments via money. And a store of value, keeping money in cash is a means of accumulating assets. So when you have money, when you collect money, it increases your assets and it accumulates accumulate your assets, right? So that's called store of value. So these are the main functions of money. And other than that, one is medium of exchange, and standard of value we can use to measure monetary value, and you can use it for future payments, and also you can use it to store value to accumulate your assets as an accumulating assets. Okay, so then we are going to talk about types of money. Basically, now we can understand different types of money nowadays. Now, first one is the currency. This means the coins and notes issued by the monetary authority of the country, Central Bank of Sri Lanka, in Sri Lankan context, and under its main currency unit. So these are called statutory valid money or charter money, right? So currency now we have and we use day-to-day transactions. And near money, so we discussed this one in the previous slide as well. So this is money that is not 100% liquid like currencies, but can be easily converted. It has highest liquidity, and you can convert next to money. So this is the near money. Little or no financial loss. This includes short-term bills such as savings and fixed deposits, treasury bills, and debenture certificates. And bank money is the money that is in the current accounts of commercial banks, are called bank money, also called demand deposit, and these are used for the transaction which use checks, right? So those are called bank money. And implicit money, usually it includes e-money, and sometimes like we use for various transactions like payments via for internet and all this. And implied currencies are non-physical currencies that are used in place of currencies to serve the purpose. Through a central agency, various people maintain accounts, and when an exchange is needed, debits and credits are exchanged, right? So that is implicit money, example, e-money. And a continuing type of money, again, electronic money or e-money. Electronic money is a card or software product that stores and trades physical money in an electronic system and reduces the value of it when engaged in the transaction. One of the most advanced cases are electronic wallet and electronic digicash. Now, if you look at what is this electronic wallet, now we are going to explain it again in the next point. So e-purse and e-wallet. Electronic wallet is a plastic wallet called smart card that you can use for various purposes, right? Sometimes you can use it as an ATM card. Sometimes you can use it as a credit card. So you can make payments, right? So transfer money. So that is called e-wallet. So you can use it as your own wallet, but the only thing is it's in a digital platform, right? So network money and cyber money are examples. Payment software is special network money used for transaction over the internet. And black money is the money that we earn from some illegal sources, like earn via drug sellings and yeah, so those kind of things. Now, if we earn them, now sometimes there are incidents that we have seen that transferring this black money into proper one, so that's called money laundering, right? So there is also one type of money. So basically that is what we talk about, types of money. So far we discussed, if you go back and tell you what we discussed so far. And today we are talking about supportive services for business, right? So we discussed at the beginning that there are different services which help to do businesses properly. And one of those are money, transportation, communication, insurance, and logistics. So from then we first talk about money, right? And then how this evolution of medium exchange happened, right? So medium of exchange, how it was evolved. And then we talk about the characteristic of good money. So money plays a major role in terms of these medium of exchange. And so that's why we talk about money here and characteristics of good money. And then we talk about functions. What does money do when we use it, right? So we talk about functions of money. And then we talk about types of money we can see nowadays. And now we are going to talk about financial systems. So financial system is also playing major role in terms of facilitating to continue businesses. So financial system is the sum of all the components involved in the execution of financial decisions in an economy, right? So now basically what does financial system do in an economy is it provides the platform to get the money from the people who have access to the people who have shortages. right? So financial system is the system that allows the transfer of money between savers and borrowers, right? So now if a person has money more than he wants, and if there is another one he wants, he doesn't have required money maybe to start a business, so then that person can get those money from the person who have excess. So but personally, when they're going to do this, they face many problems. Sometimes they don't like to personally get money from someone, and then these personal relationships are tarnished and damaged. So in order to avoid this, there is this transformation exchange process where we do from financial institutions, intermediaries, right? So that is one part of a financial system. So basically, financial system is a system allows the transfer of money between the savers and borrowers, right? So it comprises a set of complex and closely interconnected financial institutions, market, instruments, services, practices, and transactions. Financial intermediation is one of the most important tasks in the financial system. So, and if you look at the composition and layout of financial system, now you can see here, as you can see here, financial system include following regulatory authorities, and it consists of multiple units. So at the top of these institutions or authorities, central bank is there. So Central Bank of Sri Lanka and other regulatory authority, and financial institutions, financial market, and financial instruments, and also the financial infrastructure and payment systems, right? So now we are going to talk about financial institutions. All banks and non-banking institutions operating in the financial market of a country can be termed as financial institutions. Okay, in other words, the financial intermediaries involving financing are subject to this. That's what include coming under the financial institutions. So now, if you look at the central bank classification of financial institutions in Sri Lanka, so this is how it goes. Central Bank of Sri Lanka, and then we have institutions supervised by the Central Bank of Sri Lanka, and then we have institutions. Then we have institutions not supervised by the central bank, right? So central bank classification of financial institutions in Sri Lanka. So first we have Central Bank of Sri Lanka, and then institutions supervised by the Central Bank of Sri Lanka, and then institutions not supervised by the Central Bank of Sri Lanka. So let's go one by one. So we start from off with this institutions supervised by the Central Bank of Sri Lanka. So that can be categorized into two parts. One is institutions accepting cash deposits, and then other institutions. Okay, so institutions accepting cash deposits are licensed commercial banks, and then licensed commercial banks can be categorized into state banks, local private banks, and foreign bank branches, and then licensed specialized banks and registered finance banks. So these are the three institutions that are coming under the institution accepting cash deposits. And then other institutions, employees provident fund, primary dealers, and leasing companies. Okay, so now if you look at institutions not supervised by the Central Bank of Sri Lanka, institutions accepting cash deposit, and contracted saving institutions, and other specialized financial institutions. So if you take a look at what comes under the all these three categories: cooperative rural banks thrift and credit cooperative societies are coming under the institution accepting cash deposit, and contracted saving institutions, approved private provident fund, employees trust fund, and insurance companies. And other specialized financial institutions, Bank of Vanik, Housing Development Finance Corporation, enterprise capital companies, and unit trusts. So now, one of the key things that we need to, most important institution that we have to talk about this financial institution and financial system is the central bank. So central bank, we say that it is the bank of the banks. So even when we have, when we need money or financial requirement, we go and take a loan from a commercial bank. So when these commercial banks need a loan or need some assistance, they go to the central bank. So that's how it works. So that's why we say it's the bank of the commercial banks. So central bank is the central agency that acts as the government agent for the implementation of Sri Lanka monetary policy. The Central Bank of Sri Lanka was established on 28th August 1950 under the Finance Act number 58 of 1949. Organizing tasks of central bank are handled by the Monetary Board. The Monetary Board is responsible for its administration and management. And the central bank's objectives was streamlined by an amendment to the Monetary Law Act, which was revised in 2002. Accordingly, the following two main objectives have been articulated in place of the existing multilateral objectives. So basically, there are two objectives of central bank. One is economic and price stability, and then another one, establishment of the financial sector, financial system stability, right? Those are the two main objectives of central bank. So now let's take a look at those two objectives separately. So economic and price stability, stability of the local currency is the price stability. So that is like the economy need to be run with free of inflation and deflation by keeping the country's average price level stable, right? So that is one objective of central bank, to maintain the price level at a stable level. So economic and price stability are important for the economy to function well, and this depends on macroeconomic conditions, right? So macroeconomic conditions means like, so how you maintain this economic stability and price stability depends on these political and social, economic, environmental factors and conditions. So that's why we say, so this depends on, actually this depends on macroeconomic conditions. And then the other thing, the other objective of central bank is to maintain the financial system stability. The central bank aims to strengthen the financial system by identifying and mitigating potential threat to the stability of the Sri Lankan financial system. Right now, let's say, for example, why they ensure that this stability is because if one bank collapse or face any problem, what happens is it impacts the other banks as well. So when now financial institutions and financial system drive based on one factor, that is the trust we have. So what happens is when this stability is not there, people start losing trust on these financial institutions and the system. So when one company, when one bank collapses, then people or the customers start like lifting their savings and withdrawing cash. And then what happens is banks have invested this money in somewhere else, and when they all of a sudden when they come and ask, and they face many problems, right? So then it affects the entire system, smooth operations of the entire system, financial system. So that's why a central bank interferes and ensure the stability of the financial system. Why? Because it not only affects one particular company, but it affects the entire system, then entire country. So therefore, they ensure this stability as well. So those are the two main objectives. One is economic stability and price stability, and also the financial system stability. So now you know what financial system is. And that is what we actually call ensuring the stability of that is the financial system stability. So, and so we define actually the central bank. So this is the definitions. And then we talk about the objectives. So these are the main objectives: economic and price stability and financial system stability. And then we are going to talk about functions of the Central Bank of Sri Lanka, what central bank is basically doing. One is managing fiscal policy, and fiscal policies are the policies that are related to generating revenue for the country, and like tax policies. So those are called fiscal policies. And central banks interferes and involve in managing and developing these fiscal policies, and managing the exchange rate policy. So currencies, how it affects with the change with the other currencies, and issue and distribution of currency in Sri Lanka. So when the currencies are issued, and that is done by the central bank, and also management of the official foreign reserves of Sri Lanka, and licensing, regulation, and supervisions of banks, finance, and companies and primary dealers. So basically, we have a set of institutions come under the central bank, and central bank needs to monitor and manage all these institutions. So it includes bank, finance companies, and primary dealers. And also it provides clearing facilities and settlement facilities to financial institutions, and maintain central bank settlement account. So it provides some services like to settle payments via interbanks and provide required infrastructure and facilities. And also it acts as the government's economic advisor, banker, and financial representative. So now when it comes to economic policies and economic changes, and so it acts as a government's economic advisors, and central banks take all these decisions in terms of maintaining the economy. And also it functions as the banker of the government, right? When they require these also managing finance and all this, and also financial representative to the government, right? So central banks plays a key role in terms of government activities, building the economy and managing the economy in the country as well. So so that is what we talk today and discuss. So basically, so as we discussed at the beginning, we thought of talking about today about the supportive service to the business. And so it includes all these money, transportation, communication, and logistics. So they are actually what we talk about is basically the money, and what kind of role money plays in this exchange process, and characteristics of good money. So how this medium of exchange evolve over the time, and also functions of money and types of money. And then financial systems, we define what financial system is, and the compositions or layout of a financial system, and financial institutions in Sri Lanka, and then central bank classification of financial institutions, and then we define a central bank and their main objectives, and also functions of Central Bank of Sri Lanka. So those things we discuss in today's sessions, and we are going to talk about the rest of this chapter in the coming sessions. And so we hope to meet you in another session like this to talk about these aspects and supportive business services in detail. So today we are going to stop the session.